What's up, everyone? It's Scotty with MoneyVest. So we have the biggest stock market week on our hands because not only do we have inflation data coming out, we've also got the FOMC meeting, the last and the final inflation print, and last and the final FOMC meeting for 2023. So pay attention. It's going to get quite interesting going into next week because of the market's reaction, the Federal Reserve's summary of economic projections, and inflation expectations as well. So hope you all enjoyed this video, find it helpful. If you do, make sure that you drop a like. I would really appreciate you guys subscribing to the channel if you haven't already, and links to our Discord and Patreon is going to be down below. We'd love to have you on board. As always, you get access to all the members-only private videos, including 40+ tutorials and lectures. This is all ad-free content that I'm constantly adding more of these videos, and full access to our intrinsic value spreadsheets, my watch list, find out exactly what stocks I'm buying and selling through the Discord access, including trade alerts and ideas and options alerts and all the Discord channels that you can access as well. And also do check out the fundamental technical analysis courses as well as psychology and options course. Everything's going to be available down with the link below. You get lifetime access, and connect with me on Instagram as well. My handle is going to be CASWRP. I do post a lot of interesting stories and polls and tips and strategies over there as well. So we'd love to have you on board in all these different things. Again, links are going to be down below. So starting with the earnings, we do have quite a few interesting earnings coming out. I will be doing an analysis on Oracle. I will be doing an analysis on Adobe, and I will be doing an analysis on Costco as well. These are the three big ones that I'm particularly going to be interested in, and all three videos are going to be coming out later over the weekend, probably around Monday as well. And then going into the economic calendar, we do have some very, very important events, especially on Monday, December 11th. We've got the 3-year and the 10-year note auction, because that is really what's going to move the yields. And if the 10-year yield obviously moves higher, that's going to create a little bit of that interesting dynamic where the markets pulls back. I did get out of my bond trade with a 25, close to 30% profit. That was close to a macro tactical trade that I've been building my position in over the last several months. And again, if you want to get access to all these alerts, link's going to be down below, but we are out. I'm personally out on my TMF trade. And if the 10-year auction goes well, if there is a lot of demand coming in, there's possible that bond prices go up and yields come down. But if there is not a lot of demand, if it's a weak auction, then it's possible that there is yields starting to move back higher, because at the end of the day, investors are looking for a high rate of return. So if the yields go up, that means that they are demanding a higher rate of return, right? Because prices go down, yields go up. That's the inverse correlation between prices and yields when it comes to the bond market. Now, inflation numbers are going to be Tuesday. I will be live to cover these numbers, core CPI, month-over-month CPI, headline, year-over-year. Everything's going to be coming out, and the expectations are for us to stay steady at 4% on a year-over-year basis, 0.3% month-over-month, no change month-over-month, and year-over-year expected to be at 3.1%. That's going to be in line with basically coming down slightly, 0.1% from previous numbers at 3.2. 30-year bond auction, also really, really important bond auction taking place next week on Tuesday. 4.7% was the previous print, 4.5% was the previous print on the 10-year. So these are incredibly important auctions which are going to be moving the bond market, which is going to have an implication on the equities market as well. And of course, we got the Federal Reserve's budget balance, negative $67 billion was the previous number. We're going to learn more about what that number ends up looking like next week. So now we've got the PPI numbers, so producer price index, equally important, if not more so. So we got core and year over year, and headline month over month, and headline year over year. And this right here are going to be some of the expectations. Core PPI month over month expected at 0.2%, and headline month over month expected at 0.1% as well. And on Wednesday, December 13th, we've also got the Federal Reserve meeting. They're going to be coming out with their interest rate projections. We've got the, again, summary of economic projections. We got the statements. We've got the press conference at 2:30 p.m. Eastern. So it is about to get wild. It is about to get absolutely crazy, because markets are very much looking forward to what the Federal Reserve is going to say, what Jerome Powell is going to talk about, how hawkish he's going to be, what is going to be that interest rate expectations moving forward, how many cuts can we expect, and most importantly, the summary of economic projections, which is going to basically pencil in what the members of the FOMC believe or expect when it comes to interest rates. So that's going to be the dot plot. Now I'm going to be doing a separate, more dedicated videos on these topics because I think there's a lot more to discuss and we can go for hours and hours talking about what the Federal Reserve is thinking, what are they planning to do, what the market's expectations are. So I will be doing a separate video talking about both inflation and interest rate expectations. But for this video, Wednesday, December 13th, I will be live. We have to definitely pay attention to what happens at 2 p.m., 2:30 p.m. Eastern. Now, this right here is going to be continuing job claims. So this is going to be the initial claims. We've also got core retail sales. We've got initial jobless claims. We've got import-export prices, retail sales month over month, and Atlanta Fed GDP numbers, Fed's balance sheet. So this is literally going to be the biggest week for the market. Unemployment we just got on Friday. Next week, we got CPI, PPI, retail sales, consumer sentiment. We got initial claims, Fed's balance sheet, FOMC meeting, summary of economic projections, earnings. So it is going to be about as packed as it gets. And this right here is going to be Friday, industrial production, S&P Global US Manufacturing PMI. Now PMI number is still under 50. So this right here is what I'm highlighting here, 49.4. And if it's under 50, that definitely does suggest there is some type of contraction in the overall economy. So very, very important numbers coming out on Friday, December 15th as well. So going over to the market, S&P 500 has been charging through to a new 52-week high at over 4,600. So very, very nice move to the upside. So the next resistance that we are really paying attention to is going to be this red line at 46.33. So this right here is going to be that next target, that next level to watch, because that's exactly where we got rejected in the past, going back as far as March of last year. And that is going to be that next resistance at 46.33. So that is the level that we are paying attention to, and support level is going to stay put, of course, at 45.37. So this right here, previous resistance now acting as a new support for the S&P 500, not to mention the RSI and the MACD continues to be a little bit more on the overbought side. 69 to 70 RSI certainly puts us once again in that quote unquote rare territory where the percentile numbers are really, really low. The S&P doesn't usually spend a lot of time in these areas considering how overextended we are, and same thing with the NASDAQ as well, right? So we are definitely coming up to that resistance area in the 14,400 range. And again, if you pull back on this chart, you'll notice that this again has acted both as a support, which turned into a resistance on the NASDAQ, and right now we're just trading inside this level at 14,400. Now, if the NASDAQ definitely does see, let's say, a lot of momentum and a breakout, a strong breakout beyond this level, then the next target is going to be all the way up here. Let me draw a straight line. So that is going to be, oh man, I'm so bad at this. There we go. That's going to be 15,400. So that's going to be the next level. Basically, what I'm talking about is this resistance here where we got rejected. That was before the bear market started in 2022, or at the end of 2021, beginning of 2022. That was in September of 21. So that is going to be that next target in case the NASDAQ is able to break out of this 14,400 level and continue on this momentum higher, which to me seems a little bit more on the unlikely side. December seasonality is still strong. So I have no doubt the markets can maybe find some momentum, but at some point, I think the risk reward is going to catch up to the market. At some point, the overbought, overextended levels are going to catch up to the market. And the fact that the markets are rallying on the back of Magnificent Seven, and it's very, very concentrated rally, it's a very crowded trade, right? It's a very crowded trade. And we also have to remember some profit taking to close out the year, or going into January 2024 when people try to push out their tax bill for the next year, right? So if somebody sells a stock in January of 2024, according to the US fiscal year, then the taxes on those gains are not going to be due until you file for taxes the following year, right? Because the year is probably over. So that's not going to be under the 2023 fiscal year. It's going to be under the 2024 fiscal year. So you have a full year to go with those profits, and you don't have to pay taxes on it if you sell, of course, in January of 2024. So that's something to keep in mind as well, because tech has done really well. Tech has been rallying very aggressively. It's basically the main reason why the markets are higher. So if people decide to take profits off the table, if they decide to become a little bit more risk averse or de-risk from those positions, then it's possible the markets also start to roll over a little bit, considering how overbought, overextended we really are. So next week, very, very important stuff coming out. Gotta be ready. I will be live for majority of the week going over a lot of these numbers and these reports. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Definitely do check out the Discord and the Patreon links. I have opened up a few more spots. So if you're interested in joining, members only videos, Discord access, trade alerts, trade ideas, Excel spreadsheets, everything's going to be included, as well as the courses, lifetime access to all the fundamental technical analysis courses, options courses as well. So link's going to be down below. We'd love to have you on board. As always, happy investing, and I'll see you all in the next video.